You're watching EnergyNewsTV.com, your home for fresh energy news delivered daily. Today is September 16, 2024. Here is today's energy outlook to start the week. NYMEX WTI oil futures experienced a decline, reaching a low of $65.27 per barrel last week, before rebounding to surpass $70 per barrel by Friday. A point of concern for market proponents is the inability of the market to maintain the $70 per barrel threshold. This week, the $70 per barrel mark will serve as a psychological barrier for WTI, although significant resistance may not emerge until the contract approaches or exceeds $71 per barrel. In contrast, Brent oil traded above $72 per barrel and even touched $73 per barrel during the latter part of last week, yet it failed to settle above $72 per barrel. Following the recent rally, Brent has emerged from oversold conditions. However, a move towards both short and long-term moving averages remains approximately $6 to $7 per barrel higher. The increase in WTI futures towards the end of the week was partly attributed to short covering in anticipation of Hurricane Francine's landfall, which resulted in the shutdown of a considerable amount of production in the Gulf of Mexico. By late Friday afternoon, efforts were underway to restore that production, contributing to a pullback and a modest week-to-week change. One aspect likely to be affected in the U.S. Energy Information Administration data is exports, primarily from the Gulf Coast. Furthermore, crude oil and refined product imports may be disrupted due to delays and port closures caused by the hurricane. Early last week, Hurricane Francine passed through Louisiana with minimal impact, and the tropics have since quieted down until the final week of September. Meanwhile, OPEC has already postponed the return of barrels to the market by 2 months, raising the question of whether they will consider extending the timeline for production cuts as non-OPEC countries increase their output. Last week, the EIA projected U.S. production to reach 13.89 million barrels per day by the end of 2025, and the Trans Mountain Pipeline has facilitated the release of additional Canadian barrels. This week, the energy market may also be influenced by the Federal Reserve's interest rate decision scheduled for Wednesday, which has the potential to serve as a significant catalyst for all markets. While a reduction of 25 basis points is expected, a more substantial cut of 50 basis points could create a more bullish atmosphere, prompting a surge in buying activity in the petroleum sector and other economic areas. Thank you for watching EnergyNewsTV.com, your home for fresh energy news delivered daily. Stay tuned for more fresh energy news.